Now I'm really excited to introduce us to our expert for the day. We have Lindsay Chung. Lindsay is a program manager at Accion Opportunity Fund, and she has more than 12 years of experience in the accounting and finance industry. Lindsay has worked with hundreds of small business owners across the country, more than 20 different industries, from startups to established businesses. She has helped businesses understand their credit and ways to improve it, along with advising them on how to manage their cash flow, analyze their financials, and improve their bookkeeping practices. Lindsay first realized her passion for economic empowerment while proudly serving as a Peace Corps volunteer in Botswana. She has a Bachelor's of Science in Business Administration, Accounting, and Finance from the University of Colorado and currently lives in Denver. Hey, Lindsay.
Hi, Brittany. Thank you so much for inviting me today. I really appreciate it. And I want to thank each and every one of you for joining us. Credit is such an important topic for small business owners and something that can be kind of sensitive. As a small business owners, I think we oftentimes have ups and downs in our business. And so it can be really hard to maintain a great credit score, but it's a very important tool in growing our business. And so today we'll go over the importance of credit. Okay, so why is credit important? So let's start with personal credit. I think some of these may be more obvious than other ones. Having a good credit score will help you get credit cards and loans, and will also help you get a better interest rate typically. So you can get more affordable capital when you have great credit. It may also help you rent an apartment or even get a job. I've had my credit pulled since I've been in the financial industry, so that can be something that an employer looks into before hiring you. Having good credit could also get you access to more competitive insurance rates. And as I mentioned before, it can be kind of the bridge to build your business credit. Now, business credit is very similar to personal credit, except it's on the business side. It really shows lenders how risky your business is, and we'll kind of go over the difference between the two different credit, business and personal credit. So this also helps you get access to affordable business financing, which can be really important. If you get a large PO or something of that sort, it can help you order enough inventory to do that. Sometimes businesses struggle because they may provide a service and not get paid for a few months. So it could help get a credit line with a supplier, a line of credit to help manage your cash flow a little bit more effectively. So it can be a really helpful tool. In addition to that, it may help you win contracts or attract investors. It could also help reduce your insurance costs, and it may help you get into that business space or an upgrade in equipment to make your business a little bit more efficient. So personal credit is a gateway to business credit, so it's good if you have that personal credit, repaired and in place. Your business structure being formalized and registered will really help keep the consistency on your business credit report. And so I encourage you to request an EIN number if you haven't. You request this from the IRS. It's a really simple process, but this is what you use to pay taxes. And then you can also request a DUNS number. This is also free. You do this through Duns and Bradstreet. And this is the number that they report to. And so that allows you to have them report on that number. The DUNS number also had been used in the past for federal contracts or grants, so there are other benefits to having that established. And then having your personal credit in good shape is a good first step. Having a business bank account is really important in using it. So separating your finances, and I know this is really, really hard to do in the earlier stages because you are your business, and with cash flow being tight, there's a lot of exchanges between the two, and it may feel a lot easier to just have a personal one, but it really helps. It helps not only for you to get a clear understanding of what's happening in your books, but it also helps your accountant. It helps all sorts of people, lenders who will be looking at your reports. We also have grants and loans with us, and we do require a business bank account for that. So it can really open a lot of doors for your business and is a good first step. So ideally, your business is kind of incurring regular and predictable experiences, and you have a clear plan on how you plan to grow the business or build the business. And then just making sure you have a capacity in order to manage or repay the new debt. So I think this comes along with the plan, making sure that you're looking at the opportunity that you have available, and you looked at the cash flow, and it all makes sense to pull out that credit. So an introduction to business credit. So business credit's very similar to personal credit. There's a score and there's a report, but there are some key differences. So the three main largest business credit agencies is Dun & Bradstreet, Accion, and Equifax. They both have a business line along with a personal line. And then there's also something called a FICO SBSS score. This is typically what the SBA uses, and it's a combination of a personal credit score and some information from Dun & Bradstreet and a few other things in there to kind of come up with that amount. So that just shows you more how entangled your personal and your business credit can be sometimes. Some key differences is it's kind of less regulated. So as a consumer, we have a lot of rights. We have rights to get a free credit report from all the different bureaus. We have rights to dispute charges and have them removed if we don't hear from the creditor. So we have different rights like that. Those don't exist so much on the business side. And so that kind of impacts you when you're coming to monitor your credit or seeing if there's anything on there that may, cost you some funding in order to do that. There's more than one credit score. So with the personal, we have one kind of model. This one has all different models and all different standards of what's considered good and what's not. And so this should give you an idea. It's not as forgiving as a personal one. The standards are a little higher on the business side. Typically, if for Dun & Bradstreet, you do need to apply for a DUNS number. And not all lenders report bills. And so it's important to make sure that they are reporting. And as you're talking to vendors and lenders, you can start to ask them these type of questions, what they'll report on, when they'll report on them, things of that sort. And with business credit, if you pay early, it can really benefit you. And another rule is with the personal, I had mentioned that you want to pay before it's 30 days late because then that's typically when they report it. There's not the same rule on the business side. So you can be 1 day late and they could report it. Each different agency has their own rules around this, and so it depends on the agency, but it's really important that you can pay on it because they have different standards on when they'll report a late payment. Anyone can check your business credit score, so that may be something that people do in due diligence, like if they want to partner with you or invest in your business or things of that sort, they're able to look at your business credit. Another thing is that you can submit additional information to credit bureaus, like Dun & Bradstreet allows you to report certain things as far as finances go or recommendations from suppliers, things like that, so you can kind of look into maybe things that maybe you could get added to your credit report that aren't there. So that's the biggest thing. All these different bureaus look at your credit a little different. Accion tends to be a little more focused on kind of bank data. Equifax, they tend to lean a little bit more on small business lenders, and then D&B focuses more on suppliers than the other one. That's not solely what they focus on, but they do tend to lean more one way or the other here. Always separate personal and business as much as you can. Separate bank accounts, separate books, as much as you can. Consider every credit opportunity carefully. So make sure when you're looking at credit, there tends to be like a lot of online lenders that don't report on your business credit. It would be helpful if you got out credit that you could show that you paid on that credit so that you can get access to more affordable credit in the future.
Thank you so much, Lindsay. I know that was rapid fire. And thank you everyone for coming. So we have those free coaching calls that you can get on for many things, but access to capital is kind of our topic here today. We hope you feel more prepared to tackle some of this and, repair your business credit. And we will see you all in the next one. Thank you, everyone.